Operation Freedom with your host, Dr. Dave Janda, on Southeast Michigan's conservative powerhouse, WAAM Talk 1600. Call Dave now at 822-1600. That's 734-822-1600.
Welcome back to Operation Freedom, folks. I'm Dr. Dave Janda, broadcasting from our Freedom Bunker here at WAAM Talk 1600. This show will be up at podcast form for you by tomorrow morning, Monday morning, at davejanda.com. I encourage you to go to the site and download and network this information to anyone and everyone you know. As you know, the information you get on this show you will never see, hear, read, or get a hint of in the from the lamestream media. I'm honored to have a new guest with us. I came across his system, the Evolution 4.0 system, via the internet and through some folks in the tech world that had sent me some information, said, this is a real legit deal, and you need to try to get this fellow on your show because he's knocking down some barriers, and he could well help your listeners with what's happening around the world and give them a big heads up through their predictive modeling capabilities. As the lead system architect for the Evolution 4.0 system and founder of Evolution Consulting, Nick Anthony Ruiz set out several years ago, folks, to really do what some folks thought was the impossible, to design a large-scale data mining system that could forecast future geopolitical and global financial events based upon linguistic analysis, in addition to other proprietary methods that he utilizes. In other words, what Nick is doing is that he's creating a collective sentiment and intention analysis engine with his system. While many said this would not be possible, the combination of his determination, his creativity, and really a talent and a very talented development team, he has proven that it is in fact not only possible, but very doable. For the past 3.5 years, Nick, along with other members of his Evolution development team, have been sharing publicly information discovered by the Evolution 4.0 system. In addition to providing a valuable level of insight to traders and investors, he has also established an indisputable track record of accuracy for the Evolution 4 system. In terms of finance and economics, the Evolution system has proven over actually 96% accuracy in forecasting equity and capital market trends, such as moves in precious metals markets. Nick, welcome to Operation Freedom.
Dave, thanks for having me on.
So first question has to do, we recently, Nick, went through this issue of Britain exiting the European Union, so-called Brexit. And the question I have for you is, what has your modeling, did your modeling pick, I assume it picked it up beforehand, but what has your modeling picked up as it relates to what's the ramifications, if you will, of the Brexit vote?
If we were a month and a half prior to, if you go on our YouTube channel, there is a video of yours truly looking very smug, confidently predicting that the Brexit vote would be a yes. And that's right around when a lot of the folks that were pro-Brexit in the UK kind of were looking sort of defeated. Mm-hmm. And I said, oh, no. I said, we've seen this story play out once before, and it didn't work. And that was, if you can remember, about a year and a half. I mean, it's coming up on 2 years now. We saw the Scottish referendum vote, and our analysis through Evolution 4.0 of what was going on was that was the first attempt of the City of London, the UK, to insulate themselves from what is going to be a thermonuclear EU debt securities bond market meltdown. And obviously, that was voted down. Now, we forecasted a yes vote on that, and it was close, and we said somebody stuck a pool cue in the bicycle spokes of that whole operation. So what the EU did is they went, okay, what the UK did is they said, okay, you don't want to let us split the toxic assets between the Bank of England and the Royal Bank of Scotland. That's fine. We're just going to leave. Mm-hmm. And the reality is that was a dog and pony show of democracy and a decision that, as we forecasted, was made in the City of London by the big banks in the city of well in advance to insulate the pound sterling as well as a lot of those UK banks from the inevitable implosion of the EU and give them a very convenient way to pivot towards the east, towards the BRICS, which may very well go down in history certainly my generation and anybody that really appreciates geopolitical and geoeconomics, that may be the most unspoken and significant financial event of our lifetime, is the Anglo-Western banking system kind of going, you know what, you're on your own.
So for our listeners around the world, because we have a huge internet listenership, Nick, next couple shoes that are going to drop out of do you see more, if you will, deterioration of what I call the criminal globalist network based on how it started with the Brexit vote?
Yes, France or Germany is probably going to be next based upon our analysis, and we've been very public about saying that. Right shortly thereafter the Brexit vote, you saw France start to talk about openly proposing a referendum to bring to vote as to whether or not they wanted to exit. And if you look what's going on in Germany with Merkel, they've just about had it with her. In terms of her management of, you can point to the Islamic immigration, et cetera, but from a purely financial perspective, we forecast a German exit. It's a drag race now between France and Germany. And we said Germany is probably going to be first. And if you've seen Deutsche Bank making headlines recently, it just seems a little too convenient and a little too easy to me for a German exit as the powerhouse of the EU. Realistically speaking, the economic powerhouse, the go-to economic powerhouse of the European Union, it just seems a little too easy for them now to go, well, because of the immigration as well as in the interest of saving Deutsche Bank, we're going to do an exit stage left too. And if that happens, that is the end of the EU. And I was joking around with some of the staff of Evolution Development Team. I said, we got to get to a bank and we have to get a 1 in 5 euro-dollar note because they're going to be collector's items soon.
Well, and educate our listeners, because let's say our listeners here in North America, like, well, okay, so the EU goes belly up. I live in Kansas, so what difference does that make?
It's the cataclysm effect. I've often said, many brilliant minds, not that I'm one of them, but I'm a guy with a program. I said, but brilliant minds have often said, a disaster is not one thing. A disaster is a series of things that go wrong, just like a building implosion at either the very right or the very wrong time. Okay, and you talk about the euro dollar going belly up. Well, what tremor effect or what shockwave effect does that have through a globally interconnected market? We just did a market update video recently on the speed of information, and if we had to select one variable, okay, that makes my generation and anybody that's alive now and involved in either trading equities or trading futures, whatever, the interconnectivity of economics has never been greater, and it increases every single day to the point where, if you live in Kansas or if you live out in, Ann Arbor, Michigan somewhere, right, and the euro dollar goes belly up, well, the cataclysm effect of, let's just say, a bond market implosion, that's going to affect U.S. Treasuries. That's going to affect the valuations placed upon the U.S. dollar, the strength and the security of the U.S. dollar, which is another currency that at some point in time I have a funny suspicion at least my generation is going to be referring to as prefaced by the phrase, hey, remember when there was a U.S. dollar. Okay? So the interconnectivity, you look at the ECB, the BOJ, the U.S. Fed, what they've been doing is something we forecasted publicly since 2014, which is, we call it round-robin printing. If one prints, they all have to print, otherwise it all comes crashing down. And the negative interest rates and the zero interest rates, and you've seen it with BOJ, you've seen it with the ECB. My personal favorite is the ECB. It's the I can't believe it's not stimulus package, which is, it's not a stimulus package, but we are going to buy back several trillion euros worth of debt. So there's that. What exactly was that? And we've seen that so many times, which is why I have to laugh when the Fed says we might raise rates. We might raise rates. And the answer is, you can't raise rates. What's left of the Anglo-Western banking system, the BOJ, the ECB, and the Fed, they all have to play from the same sheet of music. Otherwise, it all comes crashing down. And it's an inevitability. It's not an if, it's a when. And to understand that why, you have to sort of, believe it or not, look to the precious metals market to see what Russia and China and the BRICS nations and the AIIB are up to see that top-level paradigm systemic evolution taking place.
Well, let's talk about your Evolution 4 model. We're speaking, folks, to Nick Anthony Ruiz about his system. It's a predictive modeling system. It's incredible. It's called the Evolution 4.0 system. Nick, how can folks follow you? You're at evolutionconsulting.world, correct?
Yep, evolutionconsulting.world. We thought that was a really cool domain extension. We haven't seen somebody use that before. It is .world, so evolutionconsulting.world. We do have our monthly publication, which is Wirehouse. Okay, that's $99 a month. That's our deep level. We do what's called an open-ended scan. We just scan the internet for linguistics that indicate the likelihood of an outcome as it pertains to an event that might be interesting, such as Brexit or interest rates or, a myriad of other subjects. We have Switch and Signal, okay, and that's our active trader journal. It's only about 6 pages long, but that's if you trade equities or if you trade futures or if you trade commodities or anything like that, that's your go-to publication. We also have our Grant Street Notes Guide, which is there's no subscription. And if I recommend one product that people pick up, and it's obviously it sounds like gratuitous self-promotion because it is, but several years of effort went into something we call the Grant Street Notes Metals Investing Guide. And if you have an interest in any of the geopolitical components or the real mechanics behind why precious metals investing is so important, that is certainly what you're going to want to pick up. I mean, it's almost a cheat sheet for what's going on now in terms of international finance.
You're also very active on Twitter, very active on YouTube. On your website, you also have free downloads, correct?
Yep, you can view our commentary section. You can get an idea of what we're about from our YouTube channel. I mean, we do have a lot of fun on Twitter. I mean, just because the information we deal with is serious doesn't mean we have to be all the time. You have to have a sense of humor to do this stuff day in and day out, or you will go insane. But we're very active on Twitter, and we enjoy when folks email us. We get some of our best research ideas from our readers. Man, they'll come up with a question. They'll say, "Hey, what do you think of?" And it's like, wow, we didn't think to research that. That's really neat. So, we certainly enjoy the interaction. With our customers. I had no intentions of continuing doing this publicly. It was really just a test of concept phase, but then I kind of stopped and I spoke with the rest of the Evolution dev team and I said, wow, that was a really cool creative outlet. I had fun. I still like to think that there are people out there that really appreciate, what we share. And we've been seeing more and more of that recently where people are going, heck yeah, you're doing a great job. Keep it up. So I call those the 10 percenters. I've done a lot of so-called alt-right news before. And it seems like a lot of the alt-right is a little bit more obsessed with the problems and the solutions. And what we offer is, hey, listen, there's stuff going on. There's no question. Is the metals market manipulated? Sure. Is the equities market manipulated? Sure. Does the Fed dump tons of naked shorts, and smash the price of metals down? Sure. Well, we have a solution. Our approach is you convert paper into more paper into metals, which means, you have a manipulated market, but you also have leveraged ETFs out there that you can trade in the 20, 25, 30% range, depending upon what your risk tolerances are, and you can, the underlying asset doesn't suddenly become more expensive. Gold is back down to the prices it was 2 weeks ago, and you can take some of that profit from trading equities or trading futures contracts or options or whatever your weapon of choice may be, and you can go and perpetually purchase physically good delivered metals, which when it all comes crashing down, you don't have to be an economist, a rocket scientist, or a brain surgeon, to figure out that is what money is. As J.P. Morgan once famously said, everything else really is credit.
So what is your evolution model, 4.0 model, picking up financially to help our listeners? Nick, what should they be doing? What should they be going? Because right now, the mainstream media, if you listen to CNBS and Bloomberg, the metals are the metals are correcting. Oh, yeah, they're up in the year, but they're going to come right back down. And you know what? Just take your money, put it back in those stocks, in the stock market, it's in bond market. It's going to be fine. That 400-point reduction on Friday, that's just a little blip. It's going to come right back. What's your model say, Nick? What's your model say?
We made about 3 years ago, we made what is now an infamous prediction. I said that is based upon what we saw, before the Dow sees zero, it will see about 28,000. Okay. And that is a component of inflation, and hyperinflation, which has not yet started. It's going to, but it hasn't started. If you guys follow my Twitter account, you'll see last night's Arts and Crafts project. I got some notes from the Weimar Republic, and I got a $50 trillion Zimbabwe note. That is a reminder. It really does happen, and it really does happen in the modern era of global finance, I should say. But in terms of an inflated market and in terms of repressed metals pricing, what people have to realize, and this is where the Grant Street Notes Guide comes in, is the worst nightmare of any nation that has a fiat currency, read all of them, is a rising spot price, because the fairly obvious inference, and accurately so, that you can make is that lack of confidence in various fiat currencies, and if you take it to one step beyond that, a lack of confidence or a lack of trust in a banking system or a banking ideology. So when you see those metals smackdowns, as they like to call them on Twitter, and that metals manipulation, it's very easy to get frustrated. Okay. Mm-hmm. One of the things that we like to do, though, is we'll use Direxion leveraged ETFs that are out there, and I'll give two of them away for free, JNUG and NUGT. I have some customers that are trading them. I talk to them on a daily basis. And when you see those runs up, I said, let me ask you this question. You take an ETF, right, and let's say you only get 15% of a 30% rally. Well, at the end of the day, you take that 15% off the top and you go to your coin shop, you go down to a metals dealer that you trust, and you buy the physically good delivered metals. As in that case, then you stop complaining about the metals manipulation and realize that the implosion of those fiat currencies is not an if, but rather a when, which we forecast about Q1, Q2, 2018, possibly late 2017, because at the end of the day, there's a social architecture component to it, and there's certainly a you're out of running room component to it. There's only so much you can print. There's only so much ZERP and NERP you can do before mathematically it becomes impossible to sustain that system, and chaos or atrophy or systemic evolution, pardon the pun, starts to take over.
So, Nick, what you're telling me that I'm hearing is one of the single most effective ways to protect yourself from a financial cataclysm, which you believe is on your radar screen based on your system, which is so good, is to protect yourself with holding precious metals, gold and silver, for example.
Correct. And one of the things I would like to say, and I echo this many, many times in a lot of the market update videos in our publications, folks that are trading all sorts of paper gold instruments, when we talk about trading the ETFs, GDXJ, USLV, and certainly silver too, not to leave silver out, but that is not metals investing, guys. That is a trade, because when it does inevitably all come crashing down, I said, I want to be there for the phone call to Direxion or ProShares when you call up GDXJ and go, hi, can I have some physically good delivered metals? The next sound you hear will be someone laughing hysterically at you. That is not metals investing. If you can pick it up, touch it, and hold it, and you have physical delivery or it's in a trusted vault, that's metals investing. Everything else is using manipulation to your own advantage to create, that's going to create those wild swings in the market that are going to get you those moves. And it's not just the metals ETFs. We've identified, you can look at our trading record that's on there. We have an average price action from when we recommend an equity. We have an average upside price action of 58%. Now, I look around. I haven't seen anybody else that can certainly claim that or prove that. All right. And the object of the game is to use those capital markets, use those manipulated markets, however which way you can, instead of complaining about it and saying, we need to go back to, well, the reality is we're going forward to, but utilize those manipulated markets to just create more paper. And that is how the wealthiest families in this country and certainly others, it seems like a very simplistic strategy, and it is. It's called a wealth transfer, and that's what's going on. And the idea is as you start to see metal spot prices rise, which are an inevitability, there's only, especially now with the Shanghai Gold Exchange and ostensibly the City of London both playing from the same sheet of music, if you think the Federal Reserve and the COMEX is going to be able to stop them, that's standing in front of the tank at Tiananmen Square. That's an inevitable outcome. But as those metal spot prices, start to rise, something else I'd like to pass along to your listeners is you certainly don't want to sell your metals with a buy low and sell high mentality. The idea is to be holding on to those physically good delivered metals, certainly after there is no fiat currency to compare them to. Otherwise, you're falling victim to a long side supply squeeze.
So the system resets. The entities that your predictive model shows that will not only hold value but enhance significant value are gold and silver, and that you're not going to turn that in for paper money like in the Weimar Republic in Germany in the 1930s. You're going to hold that metal and you're going to use that to purchase items, whether that's groceries or whether that's real estate.
Correct. And it's about one of the most important concepts, and I guess there's a reason you don't, as you like to call it, the lamestream media. I suppose there's a reason you don't hear about it spoken of very often on mainstream media, which is something called purchasing power. Spot price, and I talk about spot price on a daily basis only as it pertains to trading ETFs and other metals trades. What the spot price of gold and silver is, I don't care. It's about what's the purchasing power going to be after there's no fiat left to compare it to, because the spot price actually encourages people to ask the wrong question, which is, how much is gold worth compared to the dollar? Mm-hmm. The real question you should ask is, what's the dollar worth compared to gold? And more importantly, take the dollar out of the equation. What's gold worth compared to goods and services? And that is where you see what purchasing power is, which is how much gold or silver, can I purchase any goods or service, would be that a want, a need, something as simple as a gallon of gasoline or something like real estate. Certainly, and that's what we encourage is use these manipulated markets. Don't complain about them. Observe, what they are for what they are and go, you know what? You can still make a tremendous amount of paper wealth if you really understand what's going on big picture wise, and really do the same thing that a lot of the folks that, many people complain about are doing. And that is, transfer wealth to yourself.
Well, Nick, there are many people out there in the alternative media that talk about, folks, gold's going to $10,000, $20,000, $50,000 an ounce quickly. Silver's going to $1,000, $2,000 an ounce. Really what they should be saying is if you own gold and silver, you will be able to purchase significantly more goods and services once this reset occurs than you even can at this point.
Dave, that is almost a direct quote, by the way, from our Grant Street Notes Metals Guide. It's not that gold is going to be worth $10,000 US. Like you would, after the reset, you would want to go to a bank and go, hi, can I have $10,000 for my 1 ounce of gold? It's that your purchasing power will be equivalent in terms of goods and services to about, and the numbers that we've come up with, I might as well share them on your show, certainly, is not that far off. It's about $10,000 US, the equivalent of $10,000 US in terms of purchasing power, and about $1,500 on silver. Once again, not in terms of U.S. dollars, but in terms of what that would purchase or what U.S. dollar equivalent would purchase in terms of today's money.
And while that's occurring, Nick, does that mean that if I looked at real estate, that something right now is selling for $500,000 is going to remain at $500,000? Because my gut tells me if it's $500,000 now, after a reset, it could be $200,000, $100,000.
Well, there is that shock effect. Certainly, there is a shock effect, and if you look at the Great Depression, and one of the things people like to do is they like to compare what's going on now to 1930s, and I said, no. I said, that's a speculative equities implosion. That was a market crash. At the end of the day in the 30s, your dollar was still worth something. Mm-hmm. You probably had less of them, right. If you were invested in the market, but that was not a currency implosion. What's going on now is far more sinister. It's a systemic level implosion. So the shock from that, it is difficult to say what that will do in terms of hard asset pricing, be that real estate or industrial machinery, stuff that you want to own, wealth-creating assets, certainly multifamily houses or single-family rental properties. Could you go out and could you buy one, at 50%, 20%, 65% of value? It's difficult to say because there really isn't a lot to compare that to. In terms of information modeling. But I would say certainly, when you think about the cataclysm effect of a U.S. dollar implosion, there are many unknowns there, okay? Because we just haven't seen it on a size and scale. But that's some research that we will do for you, Dave.
Nick, how can folks follow you?
evolutionconsulting.world. Please do visit the site. We do certainly offer no-cost stuff. Evo, EVO _consultant is at Twitter, and info at evolutionconsulting.world if you want to email us.
Nick, I'd like to thank you and your team for everything you do. The model that you've created, Evolution 4.0, is truly remarkable, and I believe it can help every one of our listeners with their financial and economic freedom. Folks, you're listening to Operation Freedom. I'm Dr. Dave Janda, broadcasting from our Freedom Bunker here at WAAM Talk 1600.